We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up PVH. We are on a 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle. Bit of a spike up to the high. So we're going to see if that market is tagging that second last candle to work its way down, or is the second last candle being respected as support, including with the fourth last candle spike down to push that market up. And also we got some solid red and green side by side, which can be connected as support for that market to work its way up. Current price. So we have current price sitting at 88.85. So if price action pushes up to the high, it can tag that highest area, red and green, which would be near the numbers of going into that midpoint of that zone, 136.17. If price action pushes down for that support, it can tag, or before it tags that support, before tagging that resistance, it can tag second level highs. So second level highs would be the next following level up, red and green, so green and red. So this will be the second level that is tagging. Now if price action works its way down, price action, that will be near the numbers of, in the middle of that zone, 106.36. So if price action works its way down, it can tag the support red and green, so that'll be the bottom of the price action body or bodies, a price action second last candle, or to the left hand side. So tagging that midpoint area, price can tag that support line of 73.43. And let's say if price action drops down just a little bit further, it can tag primarily to the third to last candle, but it may not make it there that far, so we'll take it to the second last candle. That's still within a touch of, I said third to last candle, second last candle within a touch of the fourth last candle wick. So that area will create a zone, which in this area, which would be in that midpoint, which would be near the numbers of 45.39. So let's read the market, what's going on. So we can see that price action is in the mid-range. We have price action highs, second level highs, midpoint in the middle, second level lows, and we have lower lows of structure. Okay, so we can see that anything within this area is a very tight consolidation. That market is creating those reversals, tagging the tops, tagging the bottom. So we're going to see if this market is going to be respected. So if this market is respected, that means that let's say if it respects and goes up. If it respects and goes up, it's respecting certain candles or certain areas in the market, which would be the second last candle and the fourth last candle spike down to low. It also can respect its own red and green, but it's not really likely because that price action candle is active. It can break below it. But it can also respect the left side of that red and green here. And the reason why is because if the market is at a low and it spiked up to a high, and let's say these areas respected for those circles, price action pushed up to a high, came back to retest for that first leg, second leg, fully came back down with the spike down to a low, third leg, price action pushes up with the momentum or the following candle and create that W formation. Now, if price action pushes down from this area, where's it coming from? Price action, look up towards a high. We received two touches, green and red side by side, major spike up to the high. So this candle right here is identifying, that will be price second, third, fourth, fifth, sixth to last candle to market, is identifying a spike up to the high, which is identifying that it can be a reversal in the market come down. And it did. Market created that first leg, second leg, third leg, and create that fourth leg. So we have a double top, and then the candle we on came back to retest once, pushed down, came back to retest with the third to last candle, and pushed down again. So the market is reading as a double top, a double retest, created that, and then stopped at the area of support of the second last candle midpoint. And if that market pushes down further, that means that market is tagging the what? The midpoint of the second last candle. So let's read it once again. Market's coming from that first, second, third, fourth, double top, retest 1, came back down, retest 2, dropped all the way back down to second level lows, came back to retest again, the midpoint of the second last candle. If it follows up with a bearish red candle, market's coming down from a double top, double retest and receive a push. Headed down to the 6-month time frame. So price action 6-month time frame, still reading the same bullish green candle, spike up to the high, still looking like it's tagging so far that midpoint in that area. Now if that market work its way up, red and green down to a low, overall first, second, third, that means we're looking for the breakout of the midpoint. May identify a retest, may not, may just be bullish green candles. Let's say if we do receive the retest, we'll see that double bottom retest before market to make it to second level highs before reaching overall highs of that zone. Working our way to the 3-month time frame. So price action 3-month time frame still looks the same, bullish green candle, spike up to the high. So it's still tagging that midpoint, trying to see what's going on within that area. But let's say this market drops down. And if it drops down, where's it coming from? Pulling back a little bit. Overall, let's take a look. So within this area, the market created a double top. And if you want to go for, okay, what's the overall touches? We have another double top. So we have overall first, second, third, fourth. So we have a double top. Market created another double top, which will be an overall first, second, third, fourth. Price action push back up. Now it could be a retest and then market come down. If so, that means that market is coming from that double top, double retest, and it's coming down. So what's in that area will be a double top retest, drops down. But so far, we're going to see what's going to happen near that midpoint. So we know we need a midpoint area. So while we walk down that time frame, let's put a little tight little zone in that area. And let's also put a line through it. So we know that as we walk down the time frame, we did identify this as the midpoint of that structure. Working our way to the monthly time frame. So price action monthly time frame is reading as a bullish green candle spike down to a low. So what's happening in that area, market is being respected so far from what's pattern as being identified at the low, but they're still stopped at the midpoint. So this market pushes up from that area. It's coming from that first, second, third, fourth. So it's a double bottom. Market broke through the zone, came back. So the break of that area was the third to last candle of the market. Second last candle is a retest. Now price action long wick down to the bottom could be pushing to break out. So markets could be coming from that double bottom and a retest. But we want to see price action start breaking out that zone. So far it's side by side with the price second, third to last candle, which creates the consolidation. So we're basically looking for the breakout of the third last candle towards that top side or that bottom side on this monthly time frame. Now walking down to the weekly time frame, price action weekly time frame, reading as a bullish green candle, no spike up to the high, major candles that push that market out that zone at the bottom with the second last candle, third last candle being dojis, and market pushed up. Now if you see the pattern that's being created at the bottom with that double bottom, so it's two things that can happen. It can run into the resistance, so identify as a first, second, third, and the market comes down from that double top. And if it's respected, we're looking for price action to break out the zone, to come back for the retest, looking for the trade or the investment for that market to take its way up. Working our way down to the daily time frame. So price action daily time frame reading is a bullish green candle. Also has a huge gap in the market right below that. So this candle could be reading as a support of an area of that midpoint between the zones. But we won't know until the market follows up. So far, we're going to wait around for a little bit because that market could be consolidating side by side. So we're going to wait for the breakout of the price action to the top side or to the bottom side, but it's still an active candle. So if it's still active, that means we can wait for the breakout to the top of that zone, or breakout to the top of that zone, or a pattern to identify for the low for the drop.